What's going on out there, good people? It is your boy Look Around with LMD Trading, and you know what time it is. Coming at you today with another daily trade review. Today we will be reviewing our trades from the 27th of January. And today we took, what did we take? We took 5 trades, 3 different stocks. All pretty good trades, I recall, except the first one. That first trade of the morning was, it's a word I use pretty much in every trade review that I do. And that word is premature. We got in that trade early and we paid for it. It cost us a few dollars this morning. But after that, we pretty much were spot on, I think. Let's go ahead and pull up Trader View. We'll look at the trades and the times that we took them, and then we'll get into the charts and review them, see if we got in good spots, see where we got out of them, and then we'll get out of here. So give me 1 second, and I'm going to go ahead and get Trader View pulled up. All right, so we have Trader View pulled up. Let's go ahead and get the dashboard pulled up. And like I said, we took 5 trades, had a closed P&L on the day of 116, and we got there by taking a late afternoon trade that we'll look at. But as I said, the first trade that we took was a red trade. That was on American Express. Then we took a quick little scalp on Microsoft, saw that it wasn't going to work out and got out of it. So we'll look at the chart and verify that. Then we got back in American Express, made back what we had lost plus $5. And then the last 2 trades that we took were on NVDA. NVDA. The market was in a, I call it a situation today, and we took advantage of that situation. So let's go ahead and get the charts pulled up, and we will review these trades, and I will have you on your way. So 1 sec. All right, so we have the charts pulled up here in Thinkorswim, and we'll go ahead and get right to reviewing. So the first trade that we got in today, we got in that one at 9:49, and again, that was American Express. So let's see where we're at next. I'm gonna try to, had someone ask me if I can make the candles a little bigger so you can kind of see when I say that they were kind of forming a pattern, you can somewhat see what I was talking about. So there we go. And this one here, we got in at 9:49. So we were getting in on this candle right here. And I said that I got in this trade early. And on the 1 minute, it doesn't look that way. On the 2 minute, I most definitely did. And like I said, that's usually what I'm using. So on this one, we see American Express open, came up and tested this area that we had on the chart. Because again, we want to put all of our price actions, so all of our support and resistance lines on the chart before we start taking trades. So that way we kind of know where the stock might find resistance, or it might find support if it's on the low end. So this one, we had it on the chart, came up, it tested it, came back down, tested VWAP and made a move. And we got in right as it was at resistance. And again, if you looked at it on the 1 minute, would have been getting in peekabooing off of this candle here, which, like I said, I rarely take trades off the 1 minute chart. I'm usually using the 2 minute. And as you can see here, we would have wanted to get in on this candle with it breaking that area of resistance, but with this candle not setting a new low. So this candle would have came down, set a new low, and if it would have came back up and broke this level, we still would not have wanted to get in that trade. But we got in right there, and as you can see, it came up, it rejected, and came back down, and we got out of the trade at 9:51. So we got out on this candle right here as it came back and broke that low. That's where we were going to stop out at. And we stopped out on that trade for a $30 loss. So right out the gate, we were down $30 on American Express. And as you can see, that was the high of the day. That stock pretty much just dropped the rest of the day. So the next trade that we got in was on Microsoft. And Microsoft, we got in playing a call again, trying to go to the high side. And we got in that one at 9:52. Microsoft. And we got in at 9:52. So we would have been getting in on this candle, and we got in at the right as the candle was forming, 9:52 and 9 seconds. So it would have been about right there. So if we come over to the 2-minute, we see Microsoft started down here, tested and bounced off of this support. It came up, and again, we got our support and resistance lines on the chart before we get to trading. And this one here, right as it was breaking, but again, we're coming into resistance. The optimum trade would have let this come up and then come back down and test this area, which is now support, and see if it's going to hold. If it holds, we get in the trade good. If it fails, then no harm, no foul. But as we see, this one broke the resistance and it failed. Came back down and failed and bounced off of the VWAP, which was right below it. But this trade we got out at 9:57. So let's see where 9:57 is. It's right there. So as we see, it broke it, came back down and failed, and we got out right there for a $5 gain. We could have waited till this next candle to see if it was going to actually bounce or not, but looking at how the volume was coming in and looking at the level 2 and the time and sales, kind of saw that it was not going to work out and ended up just getting out of it for that small gain. And as we see, it did not work, and it never did get back up to high of day. Just like American Express, it set the high of day early in the morning, 9:54, and we've already seen the high of day. So second trade, we made $5 on. Third trade, we went back to American Express. So let's get Amex pulled back up. And this time we were playing puts. And we got in this one at 11:21. All right, so 11:21 would have been this candle here. And we'll drag over the 2-minute. So this one came up, tested this area. It did find a little support, but rolled right back over. Came down, tested it, and now this is what we talk about. It breaks this area. It tested it, came back, and it tested it again. Perfect area to be getting in right there. right there. That's the perfect area to be getting in. So we got in that one, and we got out of that trade at 11:25. So at 11:25, right here on this candle, as it was coming down to this area of support. And we see that it acted as area of support over here on this side of the chart. Look to the left, look to the left. And we made $35 on that trade. So pretty much just traded that channel. Just traded that channel and took what the chart was giving us. Wasn't our target, but we took what the chart was giving us. And as we scroll this over, we see that it traded the channel for a good little bit, tested the channel here, and it broke it. Came back up, kind of retested. Good area to get in would have been right there. Right there would have been a good area. And then you're just riding it until it finds its next area of support, which probably was right here. I didn't have a line on the chart, but that next area would have been right there. Just looking at how this formed. And then we see it broke that area and it came down. So this would have been a good trade. That would have been a good trade right there. But I was no longer sitting at my desk at that point. But trade that we took was good. Like I say, we made $35. So that put us in the green. That made up for the first trade. And then we added to the $5. So at that point we were up. We were up $10. Then the next trade that we took was NVDA. Let's get NVDA pulled up. And NVDA we got in at 11:29. We got in this one right here. 11:29. And let's look at it on the 2-minute. So this one here, we got in this one for it to break down. It had tested it here, came back up, tested it here again. Again, we want to see that break it, pull back up, and then go like we just looked at. But we see that this held support and really was not a good entry because, again, we didn't let it break it and then hold. But we rode this one out. And this one, we had set our target, or not our target, but we had set our stop up at near the top of the channel, just because if you look, you see how American Express had been trading in a channel. This one pretty much traded in a channel, and because we were playing it to break, we set our stop up near the top of the channel. So we would have taken a larger than our usual $25 stop had we stopped out. But we set the stop there, and we set our target because I had to step away from my desk. This one had a decent enough spread to where I wasn't worried if we stopped out, it wouldn't have stopped us out with a huge spread. But as you can see, it came up to this area of the channel, broke back down, and then once it broke it, it just stayed down below it. And we got out of this trade at 12:17. So we were getting out of this trade on this candle right here, 12:17, which is right there. And this one was a auto trigger because again, we had our stop on top and our stop on the bottom. This wasn't one that I was kind of monitoring. If I was, I may have let this just kind of try to ride along, but ended up getting out of it. And this one, we hit target, which was $51. So not really a good entry, but we still made money. Not something that I want to get into the habit of doing, is taking trades that make money, but was not a good trade. But nonetheless, it paid us. And then we took one more trade, which was NVDA. And by this time I was back at the desk and I was actually looking for some daily swing plays that I trade out of my other account, where usually I try to, about between 2 and 3 o'clock, sometimes 3:30, I'll try to find ideas that I'll buy and hold overnight that meet criteria. And I was doing that, and at the same time I still had my thumbnail watch list pulled up and was just kind of looking at seeing what the market was doing. And every stock that was on my thumbnail watch list was doing the same thing. It was almost oscillating. It'll go up, hit resistance, come back down, hit support, go back up, hit resistance, come back down, hit support. And they all were pretty much just doing that, just like a waveform. So at 2:48, I took my last trade. Let's go over here, find 2:48 on the chart. So 2:48 would have been right here. And we see it right here. And we got out of that trade at 2:56. So we got out of that one right here. And as you can see, it was just coming up or coming down, and then it would come up, and then it would come down, and then it would come up. So I didn't want to get in on this candle. I didn't want to get in on that candle. I wanted a little confirmation that it was going to continue to the downside. And that's why we got in a little lower. Would have liked to gotten filled right there, but when I tried to put my order in on the active trader, this was already running and I had to kind of move my order up a little bit to get it triggered. And we got in right there. And as you can see, we pretty much rode it right down to the bottom. Got out as it was about to start coming back up. And that trade there, we made $55 on. We made $55 on that one trade. Let me see. Let's do the math just to see. So we got in, the stock was trading about 221. And we got out, the stock was down at 219. So that was a $2 move. And our option delta was right there around 26, 27 cents. So 27 or $26 for every dollar that the stock moves. And if that was at that price, that would have been $52. So like I say, this here kind of moves as the stock is moving. But $55 trade in 8 minutes, not bad. And that's at the end of the day. And after that, I didn't really want to play with it anymore. And that one, I took that trade just to kind of really get to my daily goal. I'm not going to even sugarcoat it no other way. Took that one just to kind of get to my daily goal. And just so happened that it had just the right amount of move in it. Was kind of hoping that it would have kept coming down. So by it getting at $55, I was expecting a little more out of it, but good trade overall, just for a quick scout. And as we see, it came back up to this same area and it got pushed right back down. And I'm going to just blow out all of these charts real quick because that was our last trade. We are done. And just want to kind of, this here was my watch list this morning, minus this, minus Tesla. I had Tesla on there just because I wanted to see what Tesla does. I keep hearing that people say Tesla is the stock to trade for options, blah, blah, blah. I put Tesla on my watch list and then I pulled over and looked at the option chain. No way I would ever trade Tesla. And I'm going to show you why. Come up here to trade, and this here will show us, get these out of the way. This here shows the option chain. So let's go over to the delta of 20. Wow, these things have changed. Oh, that's why, because I'm not on Tesla. Let's get on Tesla. Bam. Now let's look at it. Now let's see. And I hope y'all saw that. I'm gonna go back to NVDA real quick. So NVDA delta 26, right where I like to be. That's basically $25 for every dollar it moves. 5,000 contracts are open right now. And the bid and ask $7.70 to $7.90. That's a 20-cent spread. That's a 20-cent spread. And actually, hold on. Let me go to this one here. This is one that I made that I like to use because it gives me just the data that I want to see. So let's go back to 26 delta, 5,000, 770 to 790. And there's what I like to look at. I don't even need to look at these numbers and try to do math. This is going to tell me what the spread is right there. So let's say, go in the middle. Let's say $780 for this contract is what I would pay. And that's what I paid. Actually, nope. I paid $710 at the time that I bought it. Sold it for $765. And this is where it was trading at close. But now we'll go to Tesla. And we're going to go to that same delta, 26. Has an open interest of 5,000. That's good. Don't like that spread, 65 cents. So that's $65 that you can get lost in the spread if you stop out. If you go with a hard stop, which will stop you out at market price. So hard stop, market price, 65-cent spread from the time that your order gets accepted. So you could try to get out at $20 and end up losing $85 because of that spread. But let's look at the contract prices. $30, add 2 zeros. So this contract would cost you $30 or $3,000. Well above any small account, which is what this account is that I'm using. I would be able to trade 1 to 2 contracts per day with the possibility of losing $80 per trade because that spread is ridiculous. But on the other side, the losses can be great, but the gains can be extravagant. Let's look at these that's in the money, which here you can get in the money, which is what this purple is. And like I stated in a video, every time the stock moves in whatever direction you need it to move in, your delta is going up. Because there's another, they call them the Greeks. There's another Greek called the gamma. And what happens is every time the stock moves in your favor, the gamma is added to this amount. So you can buy an option right here. It moves in your favor. And before you know it, that contract that you paid $3,000 for is now trading at $6,000. And we'll look at, I'm going to go through real quick and just kind of flip through the ideas that was on my list this morning. And we'll look and see what Tesla did, because it was crazy. So let me pull that back up. All right, so the charts are pulled back up. And let's look at Tesla. And like I said, I'm gonna flip through all of these real quick, but Tesla opened this morning at $935. Tesla closed at $829. $105 loss. $105 drop. So again, for every dollar, I try to make $25, and I don't really worry about the gamma because I'm not staying in them that long. But if the delta stayed the same, that's $2,500 in that one move, plus whatever the gamma was adding to it. Gamma normally is going to add about 2 to 3 cents every time it moves a dollar. So I'll be staying away from Tesla, but I definitely wanted to take a look at it and see how it would play. The other way that you could play Tesla is, instead of doing a 25-cent delta, you'd have to do like a 5-cent delta. And that's not really within my strategy. What I found is I like that 25-cent delta. And when I do go to increase my risk per trade, I'll probably keep it right there at 25 cents, and I'll just buy 2 contracts. Or if I usually buy 2 contracts for stocks that move slow, I'll buy 4 contracts. I'll just scale up and go that route. But let's flip through these real quick. And as you can see, all of them top of the morning. And this is the 50-day moving average. That's a moving average that I love having on my charts. That and the VWAP. I don't worry about the 9-day moving average. I don't worry about the 20-day moving average. I just roll with the 50 and the VWAP, because VWAP is always going to act as support or resistance usually. And then I just let my price action lines tell me. So I didn't trade Apple, but let's drop a line. We see that acted as support, and then it just kind of traded along in the channel. And if we look at the 2-minute, we see, we'll go to American Express. Same thing, set the high day in the morning, came down and pretty much just oscillated. American Express somewhat acted on its own. It didn't really follow the market as much today, but the market did influence it. Whenever the market dropped, it helped American Express to drop when American Express was trying to pull higher. Let's look at Coin. Coin traded in a fairly small range today. Microsoft, we see Microsoft set its high day almost at open, dropped down, and pretty much just traded in channels. NVDA, which is what we traded, and we can see it traded in a couple of different channels as it dropped lower. Qs, same thing. So you can see the pattern. All of these pretty much were doing what the market was doing, which is the Q and the SPY. SPY, same way. Said it's open up near the 50, drop down, tested VWAP a few times, drop down, and then it finally found its channel right there. So you can drop that price action line, and you can, if you wanted to buy this, you can let it come down here to the bottom. Once you get your confirmation it's going back up, ride it to the top. Once you get confirmation it's coming back down, ride it to the bottom. And it just kept doing that. Right here, you would have got out here when you saw this topping tail, knowing that that move was done. But look at the TQQQs, same thing. It just kind of caught the wave, rode down, and then it got in a channel. We just looked at Tesla, Upstart, same thing. It set high day off the first 5 minutes, and that was it. Came down. Came down, and this one not so much of a channel. It was more of a smooth decline. And then last one that I had on the list was XLNX, and it looks the same way as Upstart did pretty much. Tried to catch a little support here, failed, and that was it. Right here would have been the good trade. Once it broke the 50, pulled back up to test it. As long as this candle doesn't break the high of that candle, you can get in right there. And could have rode this puppy all the way down. That was a let's see where we were at. That's 181. Let's say you rode it, because this is a good sign that it's still going down with a topping tail. Let's say you rode it all the way down to this bottoming tail. That was a $5 move. So on one contract, you'd have made $125. 125 on that move right there. So that's the beauty of options. Doesn't take a lot of money. You get that same money back the next day to trade with. And you somewhat have a defined risk when you take your stops when you're supposed to. Because let's say you got in this trade because it kind of bounced off of the VWAP and looked like it might go up for whatever reason. And you tried to play a call like how we tried to play the call on Microsoft, or on not Microsoft, but on American Express off that first trade. Without that stop loss, whatever the cost of this contract was, you're going to lose all of it. So let's look at American Express, and then I'm going to go ahead and shut this one down. So we looked at that trade that we took, and we got in, and it failed, and we stopped out right there. But let's say that we didn't have our stop loss in place, and this thing just tankered on us. So that was from 178. It lost $7 today. And if you rode that all the way out, let's see what contracts were going for. So they were going for $225, $244. You would have lost all of that today. That contract would probably be worth maybe a few cents. And this contract was probably, actually, I don't even have to say probably. I can tell you exactly what I paid for it. And then we'll see how much it dropped today. So I paid $455 for the 180 call. That one. I paid $455. I got out of it for $425, making me lose $30. That contract closed at 244. So had I stayed in this all the way to the end, I would be down 200 and what's that? $215, give or take. So that's why stops are important. And then I had somebody ask me, like, the most that you can lose is what you pay for the contract. That's correct. So if you pay $500 for a contract and you just hold it to expiration, which I used to do when I first started trading options, just letting them expire worthless, you can lose your entire purchase price, which is what makes options so risky. But if you get out where you're supposed to, wherever you have your area marked, so let's, even if you didn't have a stop, you just say, okay, if the price drops below this candle, I'm gonna just get out of it for whatever that price is. Just have something in place. Don't ride it all the way down, because that contract constantly loses value, just like it constantly gains value when it's going up. So just something to think about. And I'll look at this one real quick, and then, like I said, we'll be out of here. We'll look at the put contract. Let's look at the put contract. We made $35 on that contract. So the put, we paid $555 when we bought it right here. Got out at 570. And actually, we had two contracts. Paid $555 for the first one, $550 for the second one. Got out for $570, and we made $35 in that little channel there. But that was the 175 put. 175 put that we paid $555 for, closed at 737. So up almost $200. So when it was down here, it probably was selling for a good $9 when it was down there. Let's see. Oh, I can't get to it. I was going to click it on here so we can pull it up. Actually, we can pull it up, and that way we can see what the high of the day was. And then I'm going to go ahead and shut this one down. Send it to the red charts. And you'll see what option. This is what option charts look like. And this is why I don't fool with trying to look at an option chart. High of that contract was 755. So not much more. Not much more than what it was trading, what it closed at. But that's the beauty of options. Your potential, your gain potential is exponential to what it's moving. And when you understand how to read the deltas, and this delta works in two ways. So delta tells you, you can look at it and it'll tell you the percent that it, or the chance that it has to make whatever the strike price is. So let's go with what we have pulled up, American Express. We'll look at that one. So this is a call. So this is to go to the high side, 0.3. So this is saying this has a 30% chance to go to $180. 30% chance to go to 180. And it also tells you for every dollar that it moves, either way. So if it goes up $1, you gain $30. If it goes down $1, you lose $30. So that's how I use this, and that's how I can kind of define my risk. And like I say, I try to find stocks that have a decent average trading range. So this daily average trading range, and that's why I would never play Tesla, because their trading range daily is $66. And we saw today it was 100. So it traded well above its average trading range. But based on average trading range, I'll find my ideas. And then based on a stock's open interest and spread, I'll end up trading them. But if a stock has like a 0.65 spread, which is $65, I'm not touching it. That was Tesla. 25, I can somewhat manage. I just won't take a full stop. I'll stop out somewhere before it reaches my full stop, because if I let it get all the way down here, I can lose $25 because of the spread of between the buyers and the sellers. So hope that kind of makes sense on my thoughts when I'm taking my trades. And if you stuck around this long, I definitely appreciate it. Hopefully I was able to provide a little information, and we will definitely see you on the next review, which hopefully will be tomorrow, because I plan on getting in the market. As we can see, market was down today and we still hit our goal. So again, that's another beauty of trading options when you can't go short trading stocks, because you have to, one, have a margin account, and two, you have to be able to find shares to short, which I've heard in Thinkorswim is like very hard. And you have to pay for those shares to go short. Whereas trading options, there is no premium to be paying. And on that note, we're going to go ahead and end this video, and we will see you on the next one. Peace.